for joining us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first take a look at the day's highlights. Korea is one of the world's leaders when it comes to information technology. But how advanced is it when it comes to adapting to the so-called Fourth Industrial Revolution? We look for answers at this year's World Economic Forum underway in Davos. China's central bank makes an aggressive move to pump out a massive amount of cash into its financial system while growth figures hit the lowest in 25 years. We sit down with an expert to talk about this. It's been only a week since the new economy team led by Finance Minister Yoo Il-ho kicked off operations, but it already faces mounting challenges with oil prices diving further and China posting its slowest growth in a quarter of a century last year. In the face of such uncertainties, the top economic policymaker announced a number of priorities he has for the year. Our Hwang Ji-hye starts us off.
New Finance Chief Yoo Il-ho has made clear that he will put job creation above everything else he has on his to-do list this year. During his first meeting with economy-related ministers on Thursday, Yoo stressed the importance of completing structural reforms in order to attain this goal and vowed to pour efforts into the swift passage of a set of pending economy bills at the National Assembly this month. He also said the government will find fresh growth engines and breathe new life into the economy by balancing exports and domestic demand, some key issues reported during a policy briefing earlier this month.
By carrying out key policies that were announced in the briefing, we will focus on realizing tangible growth for the public.
In February, Korea will announce a set of measures to boost investment in new markets like biohealth and the sports industry. The government will also lay out plans to further promote promising consumer goods such as agricultural and beauty products in March as part of its effort to maximize the benefits of Korea's free trade deal with China. Although the finance minister did express concerns over the country's sluggish exports, coming mainly on the back of the slowing Chinese economy, he emphasized that Korea can find a way out by penetrating the construction market in Iran, where international sanctions have recently been lifted. Hwang Ji-hye, Business Daily.
The Internet of Things, surgical robots, driverless cars, and 3D printers. These are just some of the key technologies that will lead the so-called Fourth Industrial Revolution. And a new report says that advanced economies will benefit the most from such developments. But where does Korea stand? Our Kim Min-ji has more.
The theme at this year's World Economic Forum is Mastering the Fourth Industrial Revolution. It's where cutting-edge technologies are becoming embedded in our daily lives, making everything faster and more convenient. But is the world ready to adapt? According to Swiss bank UBS, advanced countries are. Switzerland topped the list, followed by Singapore, the Netherlands, Finland, and the United States. Korea ranked 25th. The ability to adapt to the Fourth Industrial Revolution was measured in 5 categories: labor market flexibility, educational system, infrastructure, technological ability, and legal protection. Korea's former finance chief, Choi Kyung-hwan, who is representing Seoul and Davos as a special presidential envoy, says Korea's creative economy drive is in line with the Fourth Industrial Revolution. The creative economy drive is aimed at merging different sectors and turning creative ideas into new business opportunities to create new jobs and industries. Speaking at a press conference, Choi said Korea needs to pursue new industry policies.
Having the right infrastructure is important. In order for our creative economy drive to work, we have to strip back regulations. As it stands, it's difficult to be innovative. Therefore, we have to cut back on red tape. Secondly, Korea needs to have an ecosystem which can tend to such developments.
Korea's former finance chief also emphasized the need for a flexible labor market and a workforce that can keep up with the rapid pace of technological developments and industry trends. Kim Min-ji, Business Daily, Davos.
Stock markets in Asia were seen struggling to recover in Thursday's trading day. After hours earlier, a heavy sell-off raised major bourses in the West into bear market territory. During Asia's trading session, oil prices registered a slight upturn, with Brent and WTI futures skimming above the $28 a barrel level. In early trading, China's Shanghai Composite and Japan's Nikkei 225 were both on their way to a rally. But after lunchtime, late trade dragged the bourses back into negative territory. Japan's benchmark closed 2.43% weaker on this Thursday. And earlier, fresh 13-year lows for crude oil trading below $27 a barrel had sent shockwaves throughout global markets, pushing several European bourses into bear market territory when their benchmark stocks dropped more than 20% from their peak. U.S. markets, including the Dow and S&P 500, were pushed into correction territory. And with that, let's now get a quick check on how the markets fared here in Seoul today. Korean shares ended lower on Thursday as overseas investors continued their selling spree amid growing concerns over the Chinese economy and falling global oil prices. At the closing bell, the benchmark Kospi dropped nearly 5 points to close at 1,840.53, while the tech-heavy Kosdaq also slipped 3.84 points to finish at 665.84. On the foreign exchange counter, the Korean currency ended at 1,213.71 against a greenback. The next gold rush might be 5 kilometers under the ocean. A Korean research institute recently unveiled a technology that allows easier extraction of element-rich minerals called manganese nodules. And thanks to this technology, Korea may be able to save billions of dollars down the line in imports. Our Lee Ju-young has this report.
Millions of these little potato-shaped rocks mask the ocean floor. These rocks are called manganese nodules, plentiful not only in manganese, but in nickel, cobalt, copper that act as basic materials for high-tech industries. The Korean government said it's now become much easier to extract these element-rich minerals from as deep as 5 kilometers below the sea surface after a state-run institute developed a so-called buffer system or an interim storage place. How it works is that after a robot vacuums up the rocks, they're then moved to a buffer system that's installed about 500 meters below the sea level. The minerals are then sucked out by pipes clog-free, allowing miners to excavate the rocks with greater consistency.
The success of this test means we now retain all the key technologies for commercialization.
The Ministry of Oceans and Fisheries says the unearthing of these rocks from Korea's exclusive 75,000 square kilometer mining zone, located within the Clarion-Clipperton Zone, 2,000 kilometers southwest of Hawaii, can replace annual nodule imports worth $1.6 billion.
Roughly 560 million tons of manganese nodules are contained in our exclusive mining zone, worth about $404 billion.
With this ample reserve and its newly developed excavation system, Korea will be able to extract 3 million tons of manganese nodules each year, pushing it above the minimum amount required for commercialization. Production for markets is expected to start in the 2020s, with full-fledged operations set to kick off after 2030. Lee Ju-young, Business Daily.
We're only 3 weeks into the new year, but the global economy has already gone through a lot of ups and downs, much of it due to China. Just today, the People's Bank of China announced a new set of liquidity measures following earlier data on its slowing growth that stopped under the 7% mark. Take a look.
China's economic growth edged down to 6.8% in the final quarter of last year, as weakness in key sectors renewed concerns that Beijing's economic slowdown may be worsening.
China's GDP increased 7% in the first and second quarter, 6.9% in the third, and 6.8% in the fourth quarter, bringing its full-year growth to 6.9%.
In fact, this is the lowest rate of expansion since 1990. a time when sanctions were imposed on China following its crackdown on the Tiananmen Square pro-democracy movement. Growth back then had plunged to 3.8%. Up until the late 2000s, China even recorded growth of over 10%, staying well above its current target of 7%. But since 2008, growth figures have been heading downhill.
Business is not as good as it used to be. In the past, our industrial zone has more than 10,000 people. Now, only a few thousand are left.
Many economists now suspect China's economy may be decelerating faster than the government has acknowledged, weighed down by debt, overcapacity in the industrial sector, and weakened consumer spending. The People's Bank of China announced Thursday it would inject 400 billion yuan using reverse repos to add liquidity to the market ahead of the Lunar New Year holiday. It has injected the most cash in 3 years in the open market. But the Chinese government is reassuring others that it's still one of the fastest growing major economies in the world, and that recent changes are a normal reflection of the country's economic structural transition.
And to tell us more about this, Professor Kim Se-hwan from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Pleasure to be here.
All right, now coming right out of that report, we heard of the massive $60 billion liquidity injected by PBOC. I know there are seasonal factors like the Lunar New Year holiday, but going beyond that, what can we make out of this?
Well, in addition to the seasonal factors of the money supply, they wanted to give a signal that they have enough measures to control the stock market. So these times, huge money supply by Central Bank of China is related to boosting Chinese stock market. Chinese stock investor has been pretty disappointed for less than expected economic growth of the China last year. So for compensating that loss, Chinese government and central bank together wanted to do something preemptive action.
Then let's go back to China's growth rate, which it was actually at its lowest in a quarter century, but it didn't still stray that far from its 7% growth target. So do you think people get this as the norm now, the new norm?
Well, in retrospect, Chinese economic growth rate was like 15% in right before 2008's global financial crisis. After that, their economic growth rate stayed around 8%. From 2012, that even decreased down further to 7% rate. So it looks that that slowing economy became a Chinese new path of economic growth in the future.
Now, it seems like this is all coming as we are seeing a shift in economic model of growth in China. What are some biggest reasons behind the slowing growth?
Well, this is actually much expected by Western economists. We compare Chinese economies to running bicycle. They can never slow down. If they slow down, the economy falls. So given that slowing economy, all hidden problems of overinvestment in Chinese housing markets and machineries has been revealed. So that's gonna be a problem related to this Chinese slowing economy.
Now, another question is whether the slowing growth in China is a temporary thing or is it going to be the long-lasting trend? Because we hear that some are actually forecasting China's economic growth to be as low as 4% this year. What are your thoughts on this?
Right. It looks that Chinese slowing economy will be lasted longer than expected by economists because they are struggling with structural problems, not temporal problems. And also regarding this year's 2016's economic growth rate of China, the actual growth rate depends on Chinese government's action. So they are about to carrying out or starting the structural reform. So the degree and size of the structural reform by policy will determine actual economic growth rate. When they go through a very serious and active economic reform, that wipes out quite a few companies, and that even further decreases growth rate of the China.
And of course, there's that saying, if China sneezes, then the world catches a cold, meaning the Chinese economy has quite a huge impact on the global economy.
Right.
In fact, the World Bank cut global growth forecasts again earlier this month, citing disappointing growth in emerging markets, especially in China and Brazil. So what are your thoughts on this?
Well, China, number one global risk of the economy is slowing Chinese economy.
Right.
And the Chinese economy's GDP became simply the largest in terms of the purchasing power parity from 2014. That means in more accurate measures of the GDP, Chinese economy is even bigger than that of the United States. And in addition, China is first and second largest trading partners of the all G20 economies. So they have enough power to slow down the global economy.
And amid all these growing worries, China has been reassuring the world that it will get back on its feet. It's just in the transition of structural reforms. Now, what are some measures that China is, I guess, putting forth in order to get out of this slowing growth? And do you think these measures are enough for it to get it back on its feet?
Well, in addition to expansionary monetary policy that we have seen today by Central Bank of China, the top economic policy priority is given to structural reform. That's the number one policy goal of Xi Jinping's government. So public companies and quite a few overinvested industries will be going through structural reform. So therefore, there is a big problem with the governments and the rich people or establishments of the China. That's going to be a concern related to the effectiveness of the Chinese policy.
Now, considering that Korea has a large dependence on China in many ways, I guess it's time for Korea to find new ways to grow. Do you have any suggestions on that?
Well, the long-term solution is, of course, diversifying our trading partners and improving our competitiveness through research and development. However, in the short run, we have to improve the soundness of the economic fundamentals. So we had a huge impact from 1997's Asian financial crisis. But the situation was different in 2008. The only difference is economic fundamentals. So we need to necessarily upgrade our economic fundamentals.
Let's hope to see more of that coming out of Korea. And also, I wonder what kind of surprises await us from China.
Right.
All right. Thank you so much for coming in today, Professor.
Thank you very much.
And that does it for today. But we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and bye-bye for now.